Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hi everybody, Adam Bergman here, tax attorney and founder of IRA Financial. Welcome to another episode of AdMail. On today's episode, self-directed IRA IRS reporting. That is the topic of today's podcast. Thanks to some of your suggestions, which I do listen to. I've been married for, about 17 years, and I'm very good at listening. I know my role. So the suggestions I got that were pretty frequent is, hey, why don't you create an AdMail where it's based off a header, meaning do a podcast and questions that are specific to a subject matter instead of just sharing a variety of questions at different topics. It's much easier to concentrate and focus on those particular topics. So I said, your wish. It's my command. So that is what we are going to do going forward, unless until there's other suggestions. So without further ado, here is question number one. Do I have to file a tax return for interest earned from a savings account with my self-directed IRA LLC? And that's from Joanna T. So the question is, hey, I have a self-directed IRA or an IRA LLC, and I opened a savings account at a local bank, and I generated some interest, and a 1099 was issued either to the name of the IRA or to the LLC. What do I do? And the answer is simple. You didn't earn the interest, okay? The IRA or the IRA LLC did. Now, an IRA is not subject to tax. It's exempt from tax pursuant to Section 408 of the tax code. And a single member LLC is treated as a disregarded entity for tax purposes, meaning you ignore the LLC and you look to the owner, which is the IRA. So if you do get a 1099 for any interest earned on a IRA or IRA LLC savings account, it shouldn't be addressed to you. The 1099 should be in the name of the IRA or the LLC. And you don't own the LLC, right? The IRA does, and that's clear as per the operating agreement. So the answer is there's nothing you should do. Now, what you should probably consider a good procedural step is to let the bank know that an IRA or the IRA LLC, in the LLC's case, it's owned by an IRA, and you should volunteer to complete a Form W-9, which you would then indicate that the owner is an IRA, it's tax exempt, or in the case of a single member LLC, it's wholly owned by an IRA, which is tax exempt. We can help you complete the W-9, or I will do a separate podcast on that as well. And that should let the IRS know that there is a repressed reporting because the owner of the IRA, owner of the bank account is an IRA. So that's a really good question. Second question is from YouTube. I have a self-directed IRA LLC that is owned by my Roth IRA. Do I have to file an income tax return with the IRS? So another great question. As I mentioned, if you have an LLC that's wholly owned by an IRA, it's treated as a disregarded entity for tax purposes, meaning it's essentially a tax nothing. So a single member LLC, the LLC is ignored, doesn't file a tax return. A single member LLC will file a return, but the owner will report the income of the LLC. So if I individually, not in an IRA, if I individually owned 100% of an LLC and it generated $50,000 of net income after expenses, I'd report that on Schedule C, isn't Charlie, and then that income would flow to my 1040, and I would pay tax based off that and other categories of income. But in the case of a self-directed IRA LLC, and this is why the LLC works so eloquently with an IRA, is that an IRA does not pay tax. It's exempt from tax. So unlike if Adam owns 100% of the LLC, that income gets filed on a Schedule C and would flow to my 1040. An IRA does not file a tax return. An IRA is exempt under 501 or 408 and doesn't file a return. So if an LLC is wholly owned 100% by an IRA, there is zero federal income tax, and most state returns are not required as well. Now, the LLC may have to file annually with the state of formation, whether it's a franchise fee or just the ability to continue doing business in that state. And that's not a tax return. That's just a annual filing a registration fee. That can range from $0 to a few $100. An outlier is California, which has an $800 minimum franchise fee, but most states are in that bucket of $0 to a couple $100. But that's not a tax return. On the flip side, if your LLC is owned by two or more parties, like two IRAs or an IRA and an individual, an IRA and an entity, then that LLC is deemed a partnership for federal income tax purpose. And even though the LLC is not subject to any tax at the entity level, right? It's a pass-through partnership. The owners will report the income of that LLC. In the case of the IRA, even though the IRA is not subject to any tax, right? Because an IRA is exempt from taxation in most cases, it still would have to file a partnership return form 1065, right? That would be due April, well, it would be due March 15th, April 15th for the partnership. And that would be, well, actually March 15th, if it's a flow through, it would be due March 15th, just like an S Corp. C Corp's due April 15th with your individual tax return, but no tax would be due, but a return would have to be filed. Now, if you're a client of IRA Financial, we would file the 1065 for your IRA. No tax would be due at the partnership level, but technically the return would still be required to be filed as an information return. But that's only if your LLC is owned by two or more parties. If your LLC is wholly owned 100% by an IRA, there is no federal income tax filing for that entity. So great question. Thank you very much. Whoever submitted that on YouTube. Third and final question of today's podcast is from Ricky F. Hi, I invested in a business via my self-directed IRA and received the K1 that had a loss. What do I do with that? So Ricky, you have a couple choices. Now, as I mentioned, a self-directed IRA in most cases is tax exempt. Under 501 and Section 408, an IRA does not pay tax on passive categories of income like interest, dividend, royalties, rental income, capital gains, right? Buying and selling stock, buying and selling real estate, dividends from stock, interest from loans, not subject to tax. However, in the case of 3 instances, an IRA could be subject to a tax known as UBIT, unrelated business income tax. And those 3 instances are as follows. 1, use a non-recourse loan to buy an asset like stock. Use a non-recourse loan to buy real estate. Number 2, there's an exception for 401ks. They're exempt from this UBIT tax when a 401k acquires real estate using a loan. And thirdly, in your case, Ricky, if your IRA invests in an active trader business through an LLC or pass-through entity. Then in all 3 cases, there must be at least $1,000 in net income for you have to report it on a 990T. Now, the IRA would file the 990T, not you individually. Clients of IRA Financial, we handle that for you. That's due April 15th. That's part of our annual compliance fee, which is very unique in the space. There's no one else that does that. Here's the caveat. You need that $1,000. So if you have a loss, Ricky, you don't have to file the 990T. Now, some folks would say, you know what, I'm going to file the 990T and just lock in the loss. And just so there's a record of it from an IRS standpoint. And that's good practice. Some folks on the flip side will say, I don't need to do that. When there is a year where there is gains, I will have that loss from a previous year and I'll report it on the return because the return technically is not required to be filed if there's not at least $1,000 in net income. So both ways work. It's up to you. You're not going to lose that loss. If you have it, even if you're not reported, you can still use it when you file the return. Although I think it's easier just to have it filed and recorded on the IRS's books as a loss, so then you can use it in future years to offset any future UBIT. In 2024, the highest UBIT tax rate is 37%, which kicks in at approximately $14,500. So it's a very, very low income threshold and a very, very high tax, which could spoil a really, really attractive retirement investment and trigger a tax that would not otherwise be included if you were not triggered, if you did not trigger the UBIT tax. So that's something to keep in mind. And another reason you want to work with professionals like IRA Financial that can help you spot issues and help you potentially even block some of this UBIT and reduce it, in some cases, eliminate it with the right structuring. So the good news is single member LLCs, no tax return filings. Partnership return, yes, 1065, although no tax. The only time you're going to potentially have any tax is if you have more than $1,000 in net income, and it's triggered if you use a non-recourse loan to buy real estate in an IRA, non-recourse loan to buy an asset like stock, or you invest in an active trader business like a restaurant through an LLC that generates more than $1,000. I keep focusing on the word non-recourse loan. Why? Because under 4975, you cannot personally guarantee an obligation of the IRA, and that's why the loan must be non-recourse. Non-recourse means you do not personally guarantee it. So that's it. Thank you to Ricky, individual on YouTube, and Joanna. I appreciate the great questions. This was an AdMail episode that focused on self-directed IRA IRS reporting. That's a tongue twister. So hope you guys enjoyed the podcast. Hope you learned something from it. I think it's very important. It's one of the advantages, the strengths of the IRA is you're generating tax deferred or tax-free income in the case of the Roth IRA. In most cases, you're not going to deal with UBIT, and you're going to be able to eliminate any tax from your transaction, which will help your retirement account grow faster based off the principles of compounded returns. So that is really a key principle of the huge, enormous advantage of using a self-directed retirement account to make investments. So thanks again. I'm Adam, tax attorney, founder of IRA Financial. Look forward to seeing all of you again on my next podcast. Have a great day and see everyone again next week. Thanks.